Greetings, Dr. Jeffrey Scott here, and this is my Market MRI Pro update for Tuesday, January 27th, 2026. Futures look a lot like the day did in that Bitcoin is kind of flat, but Dow's down a bit, Nasdaq's up 135, E-minis are up, S&Ps are up 15, gold's up a lot again, 125, and E-mini Russells are up about 3. It was a big day for mega caps, as you can see, as they led the S&P 500 to new highs. We had some big earnings reports after hours. We got some humdingers coming on Wednesday, and we got that Fed rate decision coming up as well, which is probably going to be no decision. But we'll get a Powell press conference, and we'll hear what he has to say. LRN up 18% on earnings, FFIV up 10, and XT Solar up 8.6. TXN up 8.3, and Seagate SDX was up 6.7. One tech stock, Qorvo, QRVO, down 9.4%, and Alignment Healthcare, ALHC, up 6.5% on an upgrade. So I'd say earnings are good so far, and futures reflect that. It'll be an interesting day, and really post-day will be very interesting as several things that I'm in will have earnings. Again, my name is Dr. Jeffrey Scott, Market MRI Pro at gmail.com, Google Group Top Down Trader, and website marketmripro.com. This is for educational purposes only. Any recommendations we make should be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock I mentioned. Trading stocks and options should be considered risky. You should always consult with your financial advisors before trading, and I have tools in multiple platforms. I mentioned yesterday that on the mentoring session this weekend, I'll demonstrate the freestanding scanner that we've built to support folks that want to use TradingView or other charting platforms. It's not totally finished yet. I still got to do some integrations, I meaning Praveen, but it'll allow us to go beyond the app. My top-down trader Google group is simple. Just go to Google Groups, sign into Google Groups, click all groups, find top-down trader, click join. You control your membership. If I bother you too much, you don't like it, you leave. But it's where I post every time I put out a video. I'll put a email out to the group. When I do mentoring or any live education, I'll put something there. If I discuss things that I'm not comfortable putting out into YouTube, I will put it there alone. So it's worthwhile joining it, and when I don't have deep discounts on the software, you can always get a discount by being part of that group. News and earnings. So Wednesday's FOMC rate decision and the Powell press conference. We looked yesterday at the Fed rate prediction tool or monitoring tool, and it basically 96%.1, I believe, was saying that there'd be no change. It was funny, CNBC has a group that predicts, and they do their fake Fed meeting, and they came out and said it was closer to 50-50, and that there were 3 people that wanted a 50 basis point cut. No shocker, 2 of the 3 are in real estate. I would really benefit from a bigger rate cut, but I don't think that's going to happen. So ASML, AT&T, GE Vernova, boy, GE Vernova's had great earnings reactions of late. Amphenol, Corning, who had some amazing news today. I think Meta, a multi-billion-dollar commitment to them. So a lot of exciting things there. Starbucks, after hours, Microsoft, Meta, Tesla. If we get a 3 for 3 on that, I think this market goes much higher. On Thursday, we have MasterCard, Caterpillar in the afternoon. We got Apple, so lots to come, lots to come. As I say in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. You know, Microsoft I bought about 5 days ago. When I bought it, just for an example, I'm looking at it right now. I'm looking at my position. Oh, that's the wrong place to look. Give me a second. All right, so when I bought it, it was about, I bought 450 calls, and I paid 17 bucks, and I sold against them 485 calls that I got paid 5 bucks. So I paid 12 bucks for 450 calls. So I got 12 bucks in the position. I like a 3-to-1. I can make $35 on the trade. I actually sold a 450 put for $15 and bought a 440 put for $10. So my net cost on the trade was $7. Um, so I've got, a little bit of profit in it. So I'll probably cover a lot of the short put position in case I'm wrong, and that will cost me where I made $5. I can close it for $1.50 right now, or a little bit less than that, and I'll decide what to do on the long position. The nice thing about being short that 485 call is that it's worth $15, and so and the 450 call is worth 37, so it's got $8 that it could drop, and I could still be fine. Well, I got some thinking to do about that tomorrow. But that's how I start to look at each of my positions. What's my risk? Should I take some off the table? I got a nice cushion there. I really do. I didn't expect it to move this way, this fast. I'll have to decide what to do. But it's a judgment call to hold them over earnings. It's bad judgment to not know when your stock's earnings date is scheduled. Remind everybody, free mentoring session on Saturday from 10 till 2-ish, maybe 1-ish. Spots are limited. I appreciate the sign up we've got so far. It's more than I typically get, but I usually announce them 3 days before I do it. I'll have the registration link in the remarks below, and I'm really going to dive deep into the philosophy and the reason why I'm a top-down trader and show you how I do it, and show you some of my favorite scans. And then what a lot of people like is I'll talk through the various, just like I was just mentally going through the Microsoft trade. I'll talk about some of my recent trades, but I'll also talk about my 5 favorite option trades that I take and how I manage them. So I like doing them. You'll find that I think I'm a pretty good teacher, and heck, it's worth a lot more than what you're paying for it, because you're not paying anything. Any question about anything I talk about, anything going on with me in the trading or anything like that, I'll respond personally, marketmripro@gmail.com. If you own the program and you have a tech issue, coding@marketmripro.com. Unless you were on a desert island and just came back, you've already switched to the Windows App Store version. And once you're in there, because I'm in there now, the updates and everything are really easy. We'll review it again, what you need to do once you're in it, from the perspective of monitoring it when I do the Saturday call. But other than that, not a whole lot to say about the program. It's stable, and it's really changed my life. All right, and I hope to see you guys in Florida at my fall education program. So let's go right into daily briefing. The leader was Bitcoin up 1.97, still down a teeny bit if you look at back over 5 days. So that's one thing to be aware of. Volatility was up today, but it was a good market day. Why? Qs were up 0.91, Spider 0.4, Russell 0.28, and the diamonds were actually down 0.81. I think I mentioned last night what was going on with the insurers, of which I had 1,000 shares, or not even 1,000, 10 calls in CVS. And the insurance company got new rates from the government, came out yesterday, and they were less than what they anticipated. And as a result, they sold off pretty hard today. United, Humana probably the most, and it's the rates for Medicare Advantage. So commercial payers have a combination of fully insured, self-insured, and the Medicare Advantage. Someone like United has a heavy Medicare Advantage, and Humana is pretty much all Medicare Advantage. So they got hit bad, and the dollar was down again. And I'm starting to be getting worried about the dollar. The dollar has been dropping pretty consistently, and that's not a normal thing. It's probably, at the end of the day, not a good thing either at some point. If we look at S&P sectors, tech was up 1.35, utilities 1.31, energy 0.91, staples 0.46, If we look at the laggard, it was healthcare led by the payers, 1.68 to the downside. Financials down 0.77, communications 0.74. From a theme perspective, you can see uranium, data centers right up at the top. That makes me happy since I'm pretty leveraged to them. Copper, Norway, blockchain, semiconductors, renewable energy, even solar is up there. So all these entities that might be supporting data centers and the build out of data centers really did well today. And we did hear after hours things like, I think, Micron building another factory to support the growth and the unmet need in memory chips. I think, unless there's something, and there's always black swans lingering, that's a big story with data centers and all the pieces that are necessary to bring them to market. We'll just concentrate here. It was a little weaker day from S&P 500. Less sectors and industries were up. Flip that on the NASDAQ. More sectors were up. Industries were flat. And on the NYSE, it's in the middle. You had more sectors up than the prior day, but less industries. Most importantly, only 45% of the S&P 1500 was up. 51% of the NASDAQ was up, and 51% of the NYSE. So really, at the end of the day, it kind of looks a heck of a lot like yesterday. Interesting. And if we look up here at 52 weeks, new highs minus new lows, still above 100 on the NYSE, and in the same range as it was yesterday for the NASDAQ. So kind of, at the end of the day, a relatively nothing day or not much change from the prior day. Timing model, just look down here, everything but the diamonds are green on the daily. And when we flip into the weekly, you can see everything is green, so nothing's changed there. So the intermediate term, if we look at the monthly, the longer term, let me just clear all that. The longer term trends are up, the intermediate term trends are up, and 3 out of 4 short term trends are up. To me, that's called an uptrend and is a positive market. So I would not be short here. I do expect lots of volatility potential because of all the earnings stuff, but I certainly wouldn't recommend somebody be sitting here short right now wondering what's going to happen. It might be the right thing to do, but I wait for those signals, and right now I'm not seeing those in my timing model. If we go and we look at the U.S. index ETFs, let's blow them up here and go through them pretty quickly. Up here is the high jump. I'm not going to talk about it unless it's significant. It's not on the spiders. Here's the bongos, the daily on top, the weekly on the bottom. That's my trending indicator, bullish. I use 4 different moving averages. This kind of purplish light color, that's a 21 EMA. I got a 17 simple, which travels in close company to the 21 EMA, to be clear. A 50, a 100, and 200 simple. This is seasonality. You can see over in the upper left-hand corner, green is 10-year, yellow is 5-year, is all seasonality, and then the lighter color is the last 5 years. And you can see seasonality of all time is very strong right here. Over the last 5 years, it's still strong for the next couple of trading days. So does that look bullish or bearish to you? Looks pretty bullish to me. And I like all-time highs, don't you? And we hit all-time trading highs today. I'm not sure. Let's see. I bet we got the closing high too. Let's bring it down here. Yep, all-time trading highs, all-time closing highs today. New all-time highs. I love all-time highs. Usually they go higher. If we look at the Qs, now the Qs are not there yet. As you can see, here's the all-time high, and the Qs got to clear, and look what they did today. Qs cleared that trend line resistance. Seasonality is strong. The moving averages look perfect. My guess is it's going higher. We look at the diamonds, and the diamonds are not as clean. The all-time highs are sitting back around here. Whoops. Did I hit the wrong tool? Let's try that again. That's about the all-time highs. We had a little bit of a pullback here. We pulled into the 21-day EMA, so nothing really is broken or nefarious, so that actually looks okay. So it's the one thing that isn't in a buy signal. It looks pretty healthy to me. And if I look at the Russell, it hit its all-time highs, had a shooting star just a few bars ago, pulled back and had a nice positive day. Um, Opening, trading lower, and closing at the highs of the day with seasonality coming in as well. Markets look good. I mean, black swans occur all the time. We don't go up forever, but right now, if I had to be a buyer or a seller, I'd say we're going up. The VIX, the one thing that continues to bother me, the VIX you could see was up a bit. And it's not that it was up a bit today. Why does it keep going higher on this trend line? Do we have, excuse me, do we have a big sell-off coming? We could. Remember, last February was kind of tough. Um, it's something I'm watching. It really hasn't broken out. It's still below the 21-day EMA and the 50-day EMA, but it's something worth watching, and we're watching it. Actually, it's below the 100 um, and the 50, 21 and the 17. It's already broken above. Worrisome. And then when is it too much on the dollar? Kind of getting too much to me right now. Um, that's I think we're at a point, and especially if you do this, where show you a new tool. It's not a we're not talking about a life-changing tool here, folks, when I say new tool. But I can go on here, click it there, and drag it down to here, and it tells me it's down 15.63% in not in 380 days. So it's pretty well off the highs. Is that a meaningful drop? Is it a problem? Well, I bet if you're going to Europe right now, you're not going to be real happy when you see how much things cost. It's a big drop. It's part of the reason why we've seen commodities gone wild. Speaking of commodities, let's blow them up and look at them. Gold, another massive day today, and it's trading up in the futures. At some point, it's going to correct. Seasonality is not its enemy. It's flat to positive. My biggest concern on gold is the high jump's 100. And the high jump was 100 and it pulled back. So it's not a guarantee. Well, it is a guarantee. It just doesn't tell you it's tomorrow. I'd be taking profits, and I have. On silver, thought this might be the reversal day, and it had another strong day today. Opened lower, traded lower, closed higher. Kind of flat seasonality. And if you look at where we are in the high-low jump, we are living at the 100%. Now, it's been up there a lot on this run back, and you do get little pullbacks when this happens eventually. But little pullbacks has been the key. Somebody's going to get hurt when this corrects, but it's still going higher. At least that's what it looks like. Oil joined the party. Fresh breakout here, good seasonality, and energy stocks have certainly picked up. Natural gas led oil. Natural gas had a bit of a reversal today, down 0.88%. And then if we look at rates, which matter to me and probably matter to you, 10-year was up about 0.5%, not up absolute a half, but up 0.5%. Still, you can see the close looks like, we just put that on here. The close was 4.23. And if you look at the 30-year, also up 0.69, and its close today was 4.84. I think the market prefers it to be less than 5%, and the market doesn't like it when it goes straight up, but frankly straight down. So trading in a trading range below 5% probably going to be relatively neutral to the stock market. All right, so what else can I look at? Next thing I want to look at is my buckets, and the buckets tell me there's nothing to worry about short tomorrow. that we are not at a point where we have so many stocks above the Bollinger Bands or below that we have an issue. It is interesting to me when you consider that the gray bar represents yesterday and the colored bar represents today, that on all of these we have more stocks below and more stocks above today than we did yesterday. Maybe that's a good thing and shows the market's relatively balanced. Market breadth. Interesting stuff. All-time high in the NYSE today. All-time closing high in the NYSE. So it wasn't just the S&P 500. Energy didn't hurt that. You can see stocks above the moving averages are at a level that's pretty high. Oops, didn't want to go that much, but if I compare it to the highest it's been, it's getting to that point where it might be concerning. Let's go back to 100 bars. It's easier to see. When we come down here, we could see that on both of them, the new high, new lows are positive. NYSE and the NASDAQ. AD line's positive, up-down volume is positive. And then if you look at the 13-week new high, new lows at 73% and 48%, I have no signal. I've added to this view, and we'll see if I want to send it to everybody, high jump and the 21-week, and it seems to be doing okay. You'll notice that the NASDAQ did break out today like the Qs did. The NASDAQ composite closing above that trend line. How is that not bullish? Nothing down here that tells me that something bad's going to happen. If we look at the other market breadth tool, it becomes a little bit less relevant to me right now. And why? Because I moved the 13-week signal over. But you could see you still got some AD line divergence between the NASDAQ composite and the composite price. Anything else that really stood out there? Nothing else stands out to me, except you could see that pretty much across the board, the number of stocks above the moving averages is creeping up. So, of course it is. We've had a really good run in the U.S. markets. On the ratios, similar to yesterday, materials look good, energy looks good, staples looks okay. Is technology going to make a run? Looks like it, and look at how financials had died. Another way of looking at sectors, and I love looking at the various sectors and the industry groups, and I have different tools to do that. If you didn't watch yesterday, there's a lot more information on these charts than there was, and if you watched it yesterday, there's even more than yesterday. I added the percent change in case I forget what the movement was. So I've got sectors and I got Bitcoin here, not ratio charts. So you can see Bitcoin is still trading below the moving averages, still technically in a sell. I'd love to see a break above those because for whatever reason my portfolio goes up, even though I don't own any Bitcoin in that portfolio. Technology, as I said, is it starting to participate? Technology actually broke above the moving averages as in a buy signal coming out of a squeeze, part of the data center theme. Discretionary sitting above the moving averages and still in a buy, so it's still healthy. Communications broke out and then gave it back today, still in a buy. Have to watch that closely. Industrials super strong, pulling back, and did it reverse today? Maybe. Still looks good. What doesn't look good is financials. They broke through the moving averages and have been in a downtrend now. Look at the relative strength versus the spider. Weak. The high jump, maybe I should move that up to the top, has come down as well. Here is energy, looks even better than the ratio charts. It's had a great move. You can see it's been in a buy signal going all the way back to the 30th of December. You can see the breakout in relative strength. Now, if we look at the high jump and we just move it up to the top, maybe before tomorrow I'll move the rest up as well. That high jump is kind of pegged up there. What is it? At 100. So maybe energy is going to take a break soon. And materials pull back a little bit today, but still super duper strong. And then next is real estate. Real estate Want it to go higher. It's pulled back. It's still sitting above the yellow, which is the WMA for the buy sell signal. The bongos are still blue. It's still in a buy, but not that strong. Utilities broke out today, taking out not just the signal line, the WMA, but taking out the 50 up here as well, giving a buy signal. And look at this, coming out of a squeeze, a momentum breakout, volume, and a CPR. So utilities look like they want to go higher. Staples, I said there was strength, and you could see big run up. Now it's running at a more sustainable move. And yes, getting extended is extended. And here's healthcare, which had been strong and broke down below the moving averages that matter to me, and is in a sell, led by value-based managed care. Whoops, what that? Yep. And then the next one is Bitcoin. So that was the sectors. And then if I want to look at some of the big stocks that a lot of us own, and some of which are important for earnings, let's bring them up. Amazon, strong day today. I think its earnings are next week, but a really, really strong day. Now, 1 second here. Just checking one thing I forgot to look at. Ooh, Michigan came back and beat Nebraska. All right, so Amazon broke out here. Sorry, I'm a big Wolverine, and I got distracted and didn't see the end of the game. You can see strong trending, buy signal here, not extended. Amazon looks good. Apple, trying, earnings tomorrow. We'll see. People are concerned about, I guess, Apple phone sales and margins. And for all the big cap tech is how much money are they spending on AI from CapEx, and in Apple's cases, they think they're lagging in results. This is probably the big winner and why I have a piece, and Google continues to go higher. Beautiful move on Google. My God, all the way back to June. Double. Wow. Meta, Meta had a big announcement with Corning and committed to maybe 6 billion or some crazy big number for optical cable. And kudos to John Person. He was talking about buying Corning at a lot less money back in October when he did his live meeting here in Palm Beach. Going to run up to the 200 here, but it's got earnings coming, so it should be an interesting move from earnings. It's in a period where it could certainly go either way. A breakout wouldn't surprise me. Netflix, this has been the disappointment, and it's hard to know what to do with Netflix because it's going to be engaged in that battle with Paramount over Warner Brothers, and then when they win it, they're going to be in a battle with regulators worldwide as to whether or not they can actually acquire it. I'm not even sure if it's even worth the squeeze at this point for them. But I think it's safe to say they're all in and they want it and they want to own the content. But it messed up seasonality. And we were talking about how they have strong seasonality, and I wasn't going to do anything about it this year because of that. And no harm, no foul. I didn't trade it. Just typically it's why my Januaries are usually very strong because of Netflix earnings. Tesla also have earnings coming up. Similar to Meta, it's at a place it can go either way. I'd love to see it above the yellow line. We'll see if it trades there during the day. And then Nvidia, the one that I've been saying now for a while, it's going to go sideways until earnings come out. It's going sideways. Mr. Softy, man, we bought on this day. I think my trend line disappeared on when I did an update and talked about how there's probably a trend line in this area here, and we're breaking out above it and just keep going. It broke above the 50 and it's going to recapture the 200. My only fear on Microsoft and why I'm looking at do I do something with it, and and it's not the high jump. You might think it looks extended here, but you got to look and see we're not talking at 100, it's at 5%. My only concern with Mr. Softy is it's had a big run already. But I'll be long going into the print. I'll probably be less long than I am right now. And biotech just doesn't want to die. It's had some pretty rough days. Then it reverses. It's had a major run, more than a double since September. I still have some left, but I've trimmed my position, kind of the same as I've done on the metals. Pharma, they announced the next victims of IRA, not the Irish Republican Army, but the Inflation Reduction Act, which drugs are going to get hit, were published tonight. So that may cause some volatility in pharma tomorrow. No one likes the unknown. Data centers, boom, still strong as an ox. And we talked about it here with the breakout. We talked about the builders, the suppliers, the cables, the energy providers, the nuclear. It brings so many things with it as it does well, and it's obviously doing great. And one thing that was disappointment was the pullback in ITA, but maybe that pullback is over. And oh, by the way, what was the high jump when it decided to pull back? It was 100. Now, to be fair, it was 100 for quite a few days in a row, and it took a while to pull back, but it pulled back, and what did it do today? It bounced. It was up 1.56%. And that's it on those. Now, I've gone a long time, so there's two stocks I want to show you tonight that I'll be interested in tomorrow. And I'm just going to go right to the JAS layout. Now, the app that's going to be freestanding for those that don't want to buy the whole program is this section. So remember, we can go into top down and we could look at the top performing sectors. And we got utilities, energy, and tech. These are the industry groups there. Let's rank them by the top. Let's take the top 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And then we can look down here. We can rank them by percent change, which I don't like because you get a lot of stocks like this that are not really actionable to me. I can rank them by the number of positive impulses, which we'll come back to. And I've got three different durations of momentum: short, intermediate, and longer intermediate. And then I have relative volume. So a number of different ways of ranking. But let's say we want to rank them by the number of positive momentum indicators. So Uroi is a interesting play on uranium. It's a royalty corporation, and it's kind of a derivative more so than a miner. It's going to be tied to the price of uranium. It's breaking out here. Let's see if we got any fundamentals on it. It pays no dividend, 407% growth, the last earnings, which were less than a penny. It's a cheap way of playing uranium. ITRN is a tech company, run up, sideways move, good seasonality. It's got the squeeze, momentum breakout, and volume with relative strength at OBV. GEV coming into earnings. Look at the seasonality. I mean, we don't have many years of seasonality because it's a relatively new spin-off of GE, but GEV, strong seasonality. WHD, Cactus, is an oil services stock. They're responding to energy. Taiwan Semiconductor, where do you think NVIDIA's chips are made? Cup, handle, ready to break out? Maybe. So that's one way of looking. NRG, nuclear space, energy. Micron, this is the guy that just makes the memory chips and some of the SSDs. A lot of things there that are in the data center space. That's one way of looking at the markets. And that's a top-down perspective, and that's what we're going to spend our time with on Saturday. And if I just go to the impulse view, I have 37, 36 stocks, and those would be stocks in the NYSE, NASDAQ, and Amex, a dollar and 100,000 shares. And I'll just show you my two favorite scans are up at the top, the A plus and the A. The A plus scan looks for stocks that have two momentum days in a row. And the one I liked on this list is a biotech. It's an expensive biotech, ARGX. Good volume. There's your two momentum dots. There's your relative strength, your OBV, taking out the 50. Super strong seasonality. And if we look here, earnings are due February 26th, and they're expecting 595 versus, they don't tell us last February because they weren't reporting earnings as frequently, but they were less than $2. So you have at least 200% gain. So here is a young stock with a forward PE of $36. Um, and it is going to report a big earnings number, of course, unless they miss. It's got a biotech drug on the market. You could see good revenue change as well. I think this one looks very interesting to run up into earnings, and then I would decide what to do at that time. So that's the A plus scan, and on the A scan, which is looking for pullbacks and uptrends with momentum coming in, the one that I liked was BPOP. And BPOP is we talked about over the weekend, my Brazilian or other international banks. And I believe this was an international bank. Puerto Rico, found in the Virgin Islands. So it's a Puerto Rico, United States, and British Virgin Islands bank. And look at how long it's been trading at this trend line. Good, great seasonality. I got a home run here. I got CPR, volume break, CPR, a gap, volume, break, and momentum out of a squeeze with great relative strength and OBV. The longer the base, the greater the space. This thing may move a lot, and it's not extended yet. So those are two that I'm going to be looking at playing tomorrow, but a lot what I'm going to be doing tomorrow when I can is looking at my positions that have earnings like Microsoft and deciding what the best way is to manage them into to earnings. Shorter one, still not short, too long at 37 minutes. Give me feedback. What do you like? What do you don't like? How can I change the program to make it better for you? Besides make it really cheap, which I can't because it's expensive to maintain. And I hope to see you on Saturday. Thanks, everybody.